A credit score in the United States is one of the most important numbers in your financial life. It is a three-digit number that usually ranges from 300 to 850 and is used by banks, lenders, landlords, insurance companies, and sometimes even employers to judge how financially responsible you are. In simple words, your credit score answers one basic question: can you be trusted with money? The most commonly used credit scoring system in the USA is the FICO score. Whenever you apply for a credit card, car loan, mortgage, or personal loan, lenders usually check your FICO score. A higher score means lower risk for the lender, while a lower score means higher risk. This is why people with high credit scores get better interest rates and better financial opportunities. Your credit score is not random. It is calculated based on your financial behavior over time. The biggest factor is payment history, which means whether you pay your bills on time. Other important factors include how much debt you have compared to your credit limits, how long you've been using credit, how often you apply for new credit, and the types of credit you use. All these factors together create your credit profile. In the United States, credit scores are divided into specific ranges to make them easier to understand. These ranges help lenders quickly decide whether to approve or reject an application. The main ranges are poor, fair, good, very good, and excellent. Each range has a very different impact on your financial life. A credit score between 300 and 579 is considered poor credit. This range usually means there have been serious financial issues in the past. These may include late payments, missed payments, accounts sent to collections, loan defaults, or even bankruptcy. When lenders see a score in this range, they assume there is a high chance the borrower may not repay the loan. With a poor credit score, it becomes very difficult to get approved for most loans or credit cards. If approval is given, the interest rates are extremely high. So for example, a person with poor credit might get a car loan with an interest rate of 18 to 25%, while someone with good credit might pay only 5 to 7%. Over time, this difference can cost thousands of dollars. Poor credit also affects daily life in the USA. Many landlords check credit scores before renting an apartment. Poor score may lead to rejection or a higher security deposit. Utility companies may ask for deposits, and insurance premiums can also be higher. It shows that credit affects much more than just borrowing money. The next range is fair credit, which usually falls between 580 and 669. This range indicates that the person has some negative marks, but is not considered extremely risky. Fair credit often means there were late payments in the past, high credit card balances, or a short credit history. With a fair credit score, approvals become possible, but still limited. You may qualify for basic credit cards or loans, but the interest rates are still higher than average. Many people feel stuck in this range because they earn enough money, but don't understand how credit utilization or payment timing affects their score. Fair credit is often a transition stage. It shows that improvement is possible, but discipline is required. Simple mistakes like maxing out credit cards or missing one payment can keep a person stuck in this range for years. This is why understanding credit rules is so important. Credit score between 670 and 739 is considered good credit. This is a very important milestone in the USA. Once you reach this range, lenders start to see you as a responsible borrower. Most Americans fall into this category. With a good credit score, you can qualify for better credit cards, lower interest rates, and higher approval chances. Car loans become cheaper, and mortgage approval becomes more realistic. At this level, you are no longer seen as risky, but as dependable. A good credit score can save a lot of money. Even a small drop in interest rates can reduce monthly payments and total loan costs significantly. Over a 30-year mortgage, the difference between fair credit and good credit can be tens of thousands of dollars. The next range is very good credit, which falls between 740 and 799. This range puts you among the top borrowers in the country. People in this category usually have long credit histories, very few late payments, and low credit card balances. With a very good credit score, lenders offer their best interest rates. Credit card companies offer premium cards with rewards, cash back, and travel benefits. Loan approvals become faster and easier because lenders trust your financial behavior. This score range provides strong negotiating power. You may qualify for better loan terms, lower fees, and more flexible repayment options. Many financially successful Americans aim to stay in this range because it provides the best balance of effort and reward. An excellent credit score ranges from 800 to 850. This is considered elite credit. Only a small percentage of people in the USA reach this level. An excellent score shows near-perfect credit management over many years. People with excellent credit almost always qualify for the lowest possible interest rates. Lenders see them as extremely low risk. However, it is important to understand that you do not need a perfect 850 score. In most cases, anything above 760 already qualifies for the best offers. Reaching an excellent score requires consistency, no missed payments, low debt, and patience over time. It is not about earning more money, but about managing credit wisely. Improving your credit score is a slow but predictable process. Paying all bills on time is the most important rule. Even one missed payment can drop your score significantly. Keeping credit card usage below 30% of the limit is another key factor. Avoid applying for too much credit in a short period. Each application creates a hard inquiry, which can temporarily lower your score. Also, keeping old credit accounts open helps increase the average age of your credit history. Time plays a major role in credit building. Many people try to fix credit quickly, but the truth is that good credit is built through long-term habits. Consistency matters more than speed. In the United States, your credit score affects almost every major financial decision. It can determine whether you can buy a home, lease a car, rent an apartment, or even qualify for lower insurance rates. Understanding credit score ranges gives you control over your financial future. When you understand how credit works, you stop fearing it and start using it as a tool. A strong credit score is not about impressing banks. It is about saving money, gaining freedom, and building long-term financial stability in the USA. If this video helped you, hit the like button so YouTube knows this topic matters. Subscribe for real, no-hype money advice about life in America. And comment below what surprised you most or what are you struggling with financially right now.